Welcome to the Markets Mindset. Today we're talking about something that sounds almost unrealistic in a world full of indicators, strategies, gurus, and complicated technical setups. The idea that you can approach an entire trading year with only 2 trades inside your plan, a breakout trap reversal, and a premium to discount pullback entry. The truth is, most traders fail not because they don't understand technical analysis, but because they jump between setups, signals, and ideas so often that there is no repetition, no pattern recognition, and no way to build the confidence needed to execute with size. You cannot scale what you do not master, and you cannot master what you only do occasionally. So in this video, I'm going to break down the 2 trades that matter more than anything else, especially if you're day trading S&P futures on a 1-minute chart, using structure, EMAs, and simple rules. 2 trades that let you grow without complexity. Let's start with the first one. Trade number 1. The breakout trap reversal. Every market move starts with a model, and one of the most consistent models in day trading is the fake breakout, where price pushes above a clear high or below a clear low, triggers traders into the wrong direction, hits their stops, collects liquidity, and then reverses back into the range. If you've ever entered a breakout that instantly failed, you've been on the wrong side of this exact trade. Why does it work? Because markets are driven by liquidity, not your indicators, not your trend lines, but by where the money is sitting. Above a swing high, there are stop losses from shorts, and by stops from breakout traders who want continuation. That pool of orders creates the perfect target for algorithms. The same thing happens below swing lows in the opposite direction. So the breakout trap reversal is simple. You mark the most recent high or low during the session. The cleaner, the better. You wait for price to break it, not touch it. Break it, with commitment, usually with a strong candle. That's your trap. Within the next 1 to 3 candles, you look for a rejection, a full failure, back into the range. That failure is your entry signal, not the breakout, not the first candle, not the noise, the return. If you think about every painful loss in your first year of trading, a huge percentage of them came from breakout trades that failed immediately. You were on the wrong side of a trap. Once you understand that, you don't just stop taking bad trades, you start taking the right trades. The target on this model is almost always the opposite side of the range, or the nearest obvious liquidity pool, a fair value gap, an EMA, an imbalance, or the previous swing. You're not going for miracles, you're going for precision. And here's the mindset shift. You don't need to catch the whole move. You need a repeatable edge. One setup, mastered over time, is more valuable than 20 setups you barely understand. Why this setup works in 2026. You don't need to predict the economy. You don't need to understand the Fed. You don't need to read the order flow of hedge funds. You need to understand how the market hunts traders. Liquidity forms at obvious levels. Breakouts trigger emotion. Algorithms exploit emotion. Reversals form structure. Structure gives you a trade. This hasn't changed in 20 years, and it won't change in the next 20. Humans get trapped the same way, over and over again. Now let's talk about the second trade, and the one that can honestly build a career if you treat it seriously. Trade number 2, the premium to discount pullback. The second setup is the opposite side of the first one. Instead of watching traders get trapped at extremes, you are watching price move toward value, and then take a position where it makes sense, using structure, not emotion. Think of price like a rubber band. When it stretches too far, it snaps back. When it returns to value, it becomes tradable. To use this setup, you need one simple tool, a way to define the higher time frame direction and the short-term internal structure. You can do that with EMAs like the 20, 50, and 100, or you can do it with pivots, or even without indicators if you're experienced. But in the beginning, using EMAs makes it easier. A premium to discount pullback is simply price moving back into a place where the market wants to trade, after a clear push. The trick is to wait for order, not just movement. Order comes after the impulse move, the breathing out, and the correction. Here's how to spot it. Price breaks structure with momentum. Price pulls back to the discount side of that move. The pullback is controlled, clean, not chaotic. You wait for a strong confirmation candle. You enter in the direction of structure. The difference between amateurs and professionals is simple. Professionals don't chase the candle that already moved. They enter when conditions return to normal, not when everyone is panicking or euphoric. Your stop loss goes below the last swing, not an arbitrary number. Your target is the recent high or low, or the next liquidity pool in the direction of the move. No mystery, no prediction, just structure and patience. Why only 2 trades matter? You might ask, if these trades are so simple, why doesn't everyone do it? The answer is painful, because most traders don't want simple. They want excitement, they want stimulation, they want the feeling of being smart, not the reality of being consistent. Consistency is boring. Real trading is boring. The trades that pay are boring. The breakout trap works because most traders fall for it. The premium to discount pullback works because most traders chase the move after it's already finished. These 2 trades represent the psychology of the crowd and the logic of the market. The trap is emotional. The pullback is rational. Together, they cover both sides of behavior. You don't need trend reversal patterns, harmonic patterns, Elliott waves, or 15 different candles. You need one setup that takes money from predictability and one setup that earns money from structure. That's it. Building confidence. If you learn anything in 2026, learn this. The more setups you take, the more uncertainty you create. The more uncertainty you have, the more regret you feel. Regret fuels revenge trading. Revenge trading destroys accounts. Professional trading is built on confidence, not luck. And confidence comes from repetition. If you take 200 trades a month, spread across 6 setups, you don't learn anything meaningful. But if you take 40 trades a month, all the same pattern, with the same entry trigger, the same logic, and the same target system, you learn faster than almost anyone around you. You learn the nuance. You learn the timing. You learn the feeling. Every day looks slightly familiar. Every move starts to make sense. That is the path to mastery. The road to a professional approach. If you want to be a trader that grows, think like this. What can you do every day that will build skill like a muscle? Not one big idea, not one lucky trade, but repetition. Small gains. Small lessons. Repeat. The 2 trades in this video give you structure to practice. One takes advantage of human mistakes. The other takes advantage of market logic. Together, they create a full model without complexity. In 2026, ignore the noise. Pick one idea from above. Trade it until you don't have to think. Then trade it bigger. That is how traders scale. Thanks for watching. Please like and subscribe.